First of all, I would like to apologize that we're starting a few minutes late. Anyone who knows the Institute knows that this is unlike us. We're usually prompt and on time, so apologies for the slight delay. So good morning, distinguished ladies and gentlemen. My name is Ayoyinka Olajide Awosedo, proud to say MCIOD. And welcome to the launch of the 2026 Corporate Governance Outlook. Quick housekeeping. There's bathrooms right on our right side if anyone needs to use it. And that's that for now. So, good morning to our chief host, President and Chairman of Council, the Chartered Institute of Directors, Nigeria, Otunbade Tunji Oyebanji FCIOD. Our first Vice President, Mrs. Amina Oyagbola FCIOD. To our distinguished keynote speaker, who will be joining us shortly, members of Governing Council here present, our past presidents and esteemed elders of our institute, fellows, members and associates of CIoD Nigeria, to our DG and CEO, Dr. Taiwo Nola Salausa MCIOD, and to our valued partners, NGX, SEC and FRCN, who are here with us today, and our sponsors as well, Russell Smith, Energia, and International Energy Services Limited. Gentlemen of the press here present, and distinguished ladies and gentlemen. I will be your anchor for today's event, and we are going to move swiftly with the program. Now, I know we're here to discuss governance, and I promise that I'll be fully compliant with the agenda, and hopefully no regulators here present will need to caution me along the way. So today's theme is Governing for Sustainable Value, the evolving board in 2026. And this could not be more relevant. As governance continues to evolve beyond compliance into strategy, resilience, and long-term value creation. Conversations like this are not just important, but they're extremely essential. And we're honored to have amongst us an esteemed audience of directors, regulators, policymakers, and thought leaders. To formally commence our proceedings, I would like to introduce and invite to the podium the President and Chairman of Governing Council of the Institute, Otumba Adetunji Oyebanji FCIOD, to deliver the opening remarks. Thank you, sir.
Thank you very much, Ayoyinka. Very often, so I don't know whether we will make it a full-time, but I'm not sure we'll be able to pay you. Good morning, distinguished ladies and gentlemen. I have a prepared speech, but I just wanted to make a few comments. Firstly, I'm very excited about this event today because, as you know, this corporate governance space is becoming, I might say, a bit crowded. But I've always believed that, you know, the more the merrier, because this is an extremely important aspect of national life, of the economy. And I think the more people who are involved in it, the better for the economy and for the country. However, the vision of CIoD is that we should be the primary institution. We should set the pace. And if we have to talk about corporate governance, you know, in terms of a body of knowledge, a body of initiatives, I believe CIoD should be at the forefront. We should take and own this space with due apologies to whoever else is involved in that space. So I'm particularly excited that this is happening at this time, and hopefully we'll be able to continue and extend it over time. Interestingly, I was looking at Mr. Osawe this morning. today is my last day as managing director of Double One PLC. After working there for 45 years. So, but part of that journey once took me to the Financial Reporting Council of Nigeria, because at that time we were an affiliate of an American multinational, ExxonMobil. And anybody who knows about corporate governance in America knows that many of the companies there, the roles of chairman and managing director or CEO are together. So many of the Fortune 500 companies have that kind of arrangement. So it was a bit of a dilemma for me. On the one hand, I was part of that organization, and that is the practice globally. So I remember the day I had to go and face the panel. I went armed with all sorts of information about American companies, all over the world. On the other hand, I was now part of CIoD at that stage. I think I just got onto the council or something. So at the back of my mind, I was very conflicted that I'm supposed to be a custodian of these issues. And now I'm finding myself before the regulator to try and defend that position. So, this is part of everyday life, some of the things that you have to deal with on a day-to-day basis. Luckily for me, this was around 2017, 2016. Just about that time, a core investor came and bought 60% ExxonMobil shares in the company. And of course, if you own 60% of the shares in a company, you probably want to be the chairman of that company. So that is exactly what happened. So the man bought over the shares and became the chairman. And I became, shifted to being just the managing director and the CEO. So it helped solve the problem at that time. So it really underlines this whole concept of why this corporate governance outlook needs to continue to be emphasized. And I believe this is a very good start. So let me now formally read the speech that was prepared for me. Our keynote speaker, Mr. Jude Chiemeka, MCIoD, Chief Executive Officer of NGX. My first Vice President, Mrs. Amina Oyagbola, FCIOD. Council members here present, distinguished speakers, discussants, moderator, and our event anchor, board chairs, directors, regulators, and captains of industry, fellows and members of the Chartered Institute of Directors, Nigeria, gentlemen of the press, distinguished ladies and gentlemen. Good morning once more. It is my pleasure to welcome you to this important occasion, the official launch of the 2026 Corporate Governance Outlook of the Chartered Institute of Directors, Nigeria, on behalf of the Governing Council of our great institute. I extend my special welcome to our distinguished speakers, panel discussants, moderator, valued partners, regulators, members of the business community, and fellows and members who continue to uphold the highest standards of leadership and governance across our nation. Today marks a significant milestone for the Institute. The maiden edition of the Corporate Governance Outlook is a testament to our belief in an institutionalized governance framework for achieving the envisioned triple bottom line: people, planet, and profit. It is therefore a strategic document designed to shape boardroom thinking, strengthen institutional leadership, and support Nigeria's journey towards sustainable economic prosperity. In an era of unpredictable geopolitical environments, economic uncertainty, regulatory evolution, technological disruption, and shifting stakeholder expectations, the role of the board has never been more critical. Directors today are not only stewards of organizations, they are custodians of trust, resilience, and long-term value creation. It is against this backdrop that the Institute has developed the 2026 Corporate Governance Outlook. This edition reflects our deep commitment to anticipating emerging governance risks, providing forward-looking insights, equipping directors with practical tools for effective oversight. Importantly, it is grounded in the realities of our environment while remaining aligned with global best practices. At the Chartered Institute of Directors Nigeria, we recognize that strong governance is the foundation upon which strong institutions are built. And strong institutions are, in turn, the bedrock of a thriving and resilient economy. This is why we continue to invest in thought leadership initiatives such as this, initiatives that not only inform, but also challenge and inspire action. The theme of this year's Corporate Governance Outlook, Governing for Sustainable Value, the evolving board agenda in 2026, reflects a central truth that governance must evolve in response to a rapidly changing world. Boards must become more agile, more informed, more forward-looking. They must move beyond compliance to embrace true stewardship, and they must be prepared to navigate complexity with clarity, courage, and integrity. Distinguished guests, ladies and gentlemen, this launch is not an end in itself. It is a clarion call for directors to rethink assumptions, a call for organizations to strengthen accountability, and a call for all stakeholders to work collaboratively in building institutions that can withstand shocks and deliver sustainable value. As we proceed with today's program, I encourage us all to engage actively with the insights that will be shared, and more importantly, to consider how we can translate these insights into meaningful action within our respective organizations. Let me conclude by expressing my appreciation to the Advocacy and Stakeholder Engagement Directorate, the subject matter expert reviewers, Mrs. Abimbola Adebakin, MCIoD, and Mrs. Bisi Adeyemi, MCIoD, the Secretariat, ably led by the Director General CEO, the launch partners, and others who have contributed to the success of this launch. Your efforts have once again reinforced the Institute's position as a leading voice in corporate governance in Nigeria. Thank you all for your presence and continued commitment to advancing corporate governance excellence. It is now my honor to formally declare this event open. Thank you, and God bless CIoD.
Thank you very much, sir, for those insightful remarks and our call to action. It is appropriately challenging, and I believe that's exactly what good governance should be. We will now welcome some of our partners to please come and give us their goodwill remarks. These are stakeholders whose perspectives we cannot afford to ignore. So I would start by inviting Mr. Bola Ajomale, FCIoD, who's the Executive Commissioner Operations at SEC Nigeria, and he's here representing the DG of SEC, Dr. Emomotimi Agama. Thank you, sir. What's your preference, sir? Your preference.
Morning, everyone. Morning, sir. It's very good to see you all again, my dear sister, and the DG. Good morning. Thank you for having me here this morning. It's a bit of a passion for me to look at the governance in Nigeria, and I think we're headed in the right direction. I would just, however, say that I'd have been much more excited if I saw more younger faces in the room, because we continue to say they represent, at least the under 30s represent about 70% of this country. And I'd love to see 70% of the room being under 30, because really, the amount of economic activity that these young people are generating is significant. And they are the leaders, the corporate leaders of tomorrow. I believe they should be a very major focus for us, because that is where there is really significant need, and we have noticed a couple of gaps at the SEC. But having said that, this still is a wonderful event. I bring greetings from the Director General and all my colleagues at the SEC. I have a small speech and I have a couple of, and a small message to share. But it's a privilege to be here this morning to deliver a message on behalf of the SEC. I commend the CIoD for its leadership in advancing corporate governance and responsible stewardship. The Outlook has become a vital thought leadership process and resource, offering practical insights for boards, regulators, and executives. Its relevance is underscored by the increasing complexity of today's governance environment. Sound governance principles remains fundamental to sustainable organizations, fostering accountability, transparency, and resilience, especially in this kind of environment where things are changing, where things change on a dime, essentially. We at the SEC remain committed to strengthening governance practices. We're taking stock of the PLCs. We're noticing some improvements in the kind of governance that we're seeing over the PLCs, at least. Reporting, for example, for last year has increased from about 65% in 2023 to over 79% in 2025. There, however, are a few concerns. First of all, the issue of independent directors transmuting into becoming active directors, or even vying for the position of managing director of companies, that still is a bit of a concern for us. We find that quite a few of the PLCs do not have that 30% threshold of independent directors. As a result, we don't see as much independence as we would like to see. Some of the companies we've seen, even the quoted companies, some of them that we've seen that the board committees are not really effective, and they're not able to hold their own. Most of the time, they're teleguided either by the chairman or by the managing director. Many board chairmen or majority shareholders continue to exert that kind of influence over the decisions made at the board. But we'll continue to work with them, and we'll continue to partner with the CIoD, and I'm sure we shall build a much stronger economy because of it. So on behalf of the management and staff of the SEC, I congratulate the Institute, and I wish the stakeholders, all the stakeholders, continued success in their enterprise. And we look forward to a much more transparent and more accountability in Nigeria. Thank you very much.
Thank you very much, sir. To speak directly to your point about involvement of younger directors, let's let you know that the Institute has been very intentional in this regard and has started an initiative called the Young Directors Forum, which I'm proud to say I'm the first vice chair. And you're seated right next to the chair of the forum. So I'm sure she can fill you in on what it is that the Institute has planned for young directors, but being very intentional to include that segment in the Institute's strategy. Thank you so much, sir, for your goodwill message. I'd like to invite Mr. Titus Osawe from the Financial Reporting Council of Nigeria to give us his goodwill message. He's a coordinating director, Directorate of Corporate Governance and Inspection and Monitoring, and he's also the FRCN representative on the CIoD Council. Thank you so much, sir.
Very long title. Let me just do the President and Chairman of Council, CIoD. Of course, thank you for reminding me of what happened some good years ago. And of course, the first Vice President, the DG and other members of Council, all protocols duly observed. On behalf of the Executive Secretary, Chief Executive, Financial Reporting Council, we also want to say congratulations to CIoD for this very great job. You know, each time people talk about corporate governance, and especially when it has to do with what I would call very strong support that we are receiving from everybody. And I like what the President said, the space is occupied by so many. And I think we are happy that we have so many organizations and institutions that are interested in good corporate governance practices generally. So on behalf of my CEO, we want to also lend our, support, as it were, to the 2026 Corporate Governance Outlook that we are here to launch. I'll just try and read a few of because I see it will be a very long reading if I do all of the things that have been sent as a speech. But to formally acknowledge the fact that the FROC is encouraged by this very wonderful step that has been taken by CIoD to launch the 2026 Corporate Governance Outlook. Of course, we are confident that with this, there will be a continued shaping of our corporate governance discourse and practices as a jurisdiction. And of course, while that is going on, the issue of sustainability and the sustained value that each of these entities are expected to attain, we can then have a guarantee that there is someone watching the back for all of these entities. The Executive Secretary, Chief Executive would want us to know that we are encouraged by what is going on, and we are also, as much as possible, monitoring the corporate governance space. And that is why I'm sure CIoD is aware that, knowing that we have we have the Nigerian Code of Corporate Governance 2018 that has been out there for a couple of years. We have also thought that over time, there have been certain areas that needed some touch-up. And so currently, one of the things that FROC is doing is to carry out a comprehensive review of the NCCG 2018. And I think, without any doubt, CIoD was also one of those that we saw as a relevant stakeholder to help in pushing the narrative to ensure that within the next foreseeable period, hopefully before the end of this year, we'll be able to come up with a revised National Code of Corporate Governance. That has also started, and I believe we have received comments from CIoD already. Why? Because, of course, issues around IT, issues around ESG, there are he mentioned something that has to do with independent directors, all of these which were not, so highlighted in the 2018 NCCG. We are looking at bringing them on board so that at least we have a comprehensive document. Of course, all of the sectorial codes are still there, and as much as, sectorial guidelines as they are called, they are still there. But as much as possible, all of this is speaking to the corporate governance outlook generally. And so what CIoD is doing here, of course, has our full support. And on behalf of the Executive Secretary, Chief Executive, Financial Reporting Council, and all of us, I have my colleague here too. We are proud to be associated with this good work. Thank you so much.
Thank you very much, sir, for your goodwill message. We're going to be moving on to the keynote address. We welcome Mr. Jude Chiemeka, MCIoD, who is the CEO, NGX Limited. Mr. Jude Chiemeka is the Chief Executive Officer of Nigerian Exchange Limited, bringing over 26 years of experience in securities trading and assessment management across African markets. Prior to his appointment, he served as MD CEO of United Capital Securities Limited, a subsidiary of United Capital PLC. He has also held senior leadership roles at leading investment banking firms, including Chapel Hill Denham Securities and Renaissance Capital Securities Nigeria. Earlier in his career at NGX, he served as Executive Director of Capital Markets, where he played a key role in market development initiatives. He's a fellow of the Chartered Institute of Stockbrokers, an alumnus of University of Lagos, Lagos Business School, and the University of Oxford. And he is widely recognized for his contributions to strengthening Nigeria's capital markets and promoting investor confidence. Please join us in welcoming Mr. Jude Chiemeka, MCIoD.
Good morning, distinguished ladies and gentlemen. I hope you can hear me. First, let me start by apologizing for coming a bit late. We had an event this morning around investor education that we needed to just start. The President, Chairman of Governing Council, Otumba Adetunji Oyebanji, fellow Chartered Institute of Directors, welcome the Chairman of NJS Group, Dr. Omar Okwaranga. The President, Chairman of the Governing Council, Otumba Adetunji Oyebanji, fellow Chartered Institute of Directors, esteemed members of the Governing Council, distinguished discussants, moderator and anchor, board chairs, directors, regulators, and captains of industry, obviously recognizing my senior prophet, Executive Director of Market Operations at the SEC, Mr. Ajomale. Fellows and members, Chartered Institute of Directors of Nigeria, gentlemen of the press, ladies and gentlemen, good morning. I have a presentation, a slide presentation, but I won't go through all the slides. I'll just talk through the key points. I'll just talk through the key points so that we can save time. But I believe the slides will be made available to everyone after the program. It's a privilege to join you at the launch of the 2026 Corporate Governance Outlook, a landmark initiative by Chartered Institute of Directors of Nigeria. Let me begin with a sincere commendation to the Institute. This Outlook is a publication that is strategically designed to intervene in Nigeria's corporate and economic architecture at a time when governance challenges are becoming more complex, more visible, and more consequential. CIoD Nigeria has demonstrated foresight and leadership by creating a platform that anticipates emerging risk, creates critical boardroom priorities, guides directors, more effective stewardship. In doing so, CIoD Nigeria continues to affirm its role as a custodian of boardroom excellence and a thought leader shaping the future of governance in our country. Ladies and gentlemen, the timing of this outlook cannot be more significant. We are operating in an environment defined by geopolitical tensions, economic volatility, policy transitions, technology disruptions, and deepening global interconnectedness. In such a landscape, governance is no longer a background function, it is front and center. As this outlook rightly underscores, governance today, which sits at the intersection of risk and resilience, strategy and sustainability, capital and confidence. What makes this corporate governance outlook particularly impactful is its orientation. And that is why initiatives like this matter, because they do not merely describe the present, they help shape the future. It goes beyond theory. It delivers practical insights, contextual relevance, and forward-looking analysis grounded in Nigerians' realities. And this is where the Institute deserves special recognition. In a space where governance discourse can often be abstract or uncritically imported, CIoD of Nigeria has delivered a resource that is locally grounded, globally informed, action-oriented. This is how institutions build credibility. This is how they influence outcomes. From the vantage point of Nigeria Exchange Limited, the themes highlighted in this outlook resonate deeply. Because in our market, we see clearly that governance quality is now a defining factor in capital allocation. Investors are no longer asking only what is your return. They are also asking for how sustainable is your model, how inclusive and diversified is your board, how transparent are your disclosures. The message is clear. Strong governance strengthens investors' confidence, reduces risk perception, enhances access to long-term capital. I mean, we see this every day. We have a board that we call the premium board that houses companies that have the highest level of corporate governance, and they command the most liquidity, as a lot of investors, both international and local institutional investors, tend to go for such companies because of their strong corporate governance architecture. Conversely, weak governance erodes trust, increases the cost of capital, and constrains growth. Governance, therefore, is no longer a compliance exercise. It is a strategic differentiator. The 2026 outlook suffices several priorities for boards. Allow me to highlight 4. First, board effectiveness. Boards must evolve from passive oversight bodies to active strategic partners, asking better questions, engaging more deeply, and exercising independent judgment. Second, ESG is a strategy, not an obligation. The next phase is clear. ESG must move from reporting to integration and from compliance to value creation. Third, digital transformation and governance. At the NGX, technology is really at the heart of our strategy, and we must commend the SEC for their foresight as well, enabling all those technological innovation to thrive. You can recall the banking sector recapitalization that led to the first digital offer we've had in the country. In the past, that exercise used to be months before completion, but because of technology, it was completed in a matter of days. So we must commend the SEC for allowing technology to thrive in our market. Technology is reshaping risk and opportunity. Boards must build digital fluency, strengthen oversight of data and AI, and anticipate emerging threats. Fourth, regulatory evolution and market discipline. Governance today is enforced not only by regulators, but by investors, markets, and stakeholders. At NGS Limited, we view governance as foundational to market integrity. Our role is to promote transparency, strengthen disclosure, encourage sustainability reporting, and support innovation in market infrastructure. Because a credible capital market depends on credible institutions, and credible institutions are built on sound governance. If there's one central message from this outlook, It is this: Nigeria must move from a culture of compliance to a culture of stewardship. This requires stronger board leadership, continuous director development, alignment between governance and strategy, and an unwavering commitment to ethical conduct. But above all, it requires intentionality, because governance excellence does not happen by accident. It is designed, it is led, and it is sustained. Let me return to where I started. This outlook represents more than research. It presents leadership. It represents leadership, leadership by the Chartered Institute of Directors of Nigeria in elevating governance disclosure, equipping directors with relevant insights, driving accountability at the highest levels. This is, in every sense, is a call to action for better boards, stronger institutions, and a more resilient economy. Distinguished ladies and gentlemen, the future of Nigeria's economy will not be determined by policy alone. It will be determined by the quality of our institutions, the strength of our governance, the integrity of our leadership. If we can get governance right, confidence will grow. Capital will flow, prosperity will be sustained. The outlook provides a roadmap. The responsibility rests with all of us to translate insight into action. Let me seize this moment. Let us seize the moment. Let us move beyond compliance. Let us embrace stewardship. Let us build institutions that will stand the test of time. On behalf of Nigerian Exchange Limited, I once again congratulate the Chartered Institute of Directors of Nigeria for this outstanding contribution. Thank you, and God bless the Federal Republic of Nigeria.
Thank you very much, Mr. Chiemeka, for that very powerful and forward-looking keynote address as we move towards a stewardship culture and build more resilient and sustainable institutions. I would like to welcome at this point the chairman of the NGX Group and member of the Governing Council of the CIoD, Alhaji Dr. Umaru Kwaranga, FCIOD, to give his goodwill message. Thank you very much, sir.
Let me first of all apologize for my lateness, even though I was watching when it even started. I heard when the president was making, can I call it excuses, when he was combining the two positions as both the chairman and the MD, and how conflicted he was as at that time. I'm happy that he made that true confession, and that's how leaders are. Secondly, my lateness is not in my character, has been said by the MC when she was opening the CIoD launch today. For us, both at the NGS and the CIoD, we'll also consider time as very, very important and critical. So I'm once more extending my apologies. But actually, I can give maybe a reason, even though it's not supposed to be an excuse. What we are doing at the NGX, for what we have achieved in the last 2 years and what we are planning for this year, whoever that have invested in NGS knows how people have not only double, but triple their own investment in terms of their returns. We have a big offer that is coming. That's why we have invited all the stock exchanges in Africa. I received a South African, Ghana, Ethiopia this morning, and I felt that we should have a breakfast with them because we are taking them tomorrow to Dangote refinery so that they can be able to go and see what is happening before we bring that mega offer. And there are so many other offers in the pipeline. I'm happy that the Executive Commissioner of SEC is here. We are doing a lot, and we believe this collaboration with the CIoD will go a long way to make sure that we have built institutions in Nigeria, we have grown the economy, and to meet up the $1 trillion economy of Mr. President's agenda. So on this note, let me once more apologize for my lateness, and let me use that opportunity to stand on existing protocol. But you know, sometimes some of us, the disadvantages that we are having is that we'll be struggling with the microphones when people like the president have spoken. We have to start adjusting our own. We are not, in terms of the size, we are half of that. In terms of the length, we are still half. So I have to adjust this microphone lower again, even from the Jude's statements. So on this note, let me start on existing protocol. But before doing that, I will honestly mention one or two people. Our own president of CIoD, since you have assumed this leadership, you have not just started well, but you are doing a lot for this institute. And we believe it's a matter of time that people can be able to see the good work that we have been doing in the CIoD. I'm not only the chairman of the NGS, but I'm a member, governing council of the CIoD. So, Mr. President, first vice, second vice, we are proud of you people. Continue with the good work for us. We continue to give you the support. And of course, not only representatives of the DG of SEC, but Executive Commissioner Operations that is here. I must mention that when I saw my seat in front of him, I said, am I supposed to be in the front or is supposed to be in the front? Who is going to be the So you are welcome. So good morning, distinguished ladies and gentlemen. I'm delighted to be here today to be part of the launch of the 2026 Corporate Governance Outlook, a flagship publication that continues to shape conversations and set direction for governance practices in Nigeria. Let me begin by commending the Chartered Institute of Directors of Nigeria for its sustained leadership in promoting sound corporate governance, ethical leadership, and boardroom excellence. Initiatives such as this outlook are not only timely but essential, particularly in an era defined by rapid economic shifts, technological disruption, and evolving stakeholder expectations. The Chartered Institute of Directors has a well-deserved leadership position in corporate governance in Nigeria as the country's premier institute of directors. The Nigeria Exchange is the premier exchange and the listing platform of choice for companies that desire a public quotation. Our duty of care to investors requires that we ensure that our listed companies, as we mentioned by CEO Jude, maintain the highest standard of corporate governance at all times. We do this by embedding good corporate governance as a requirement to qualify for listing. We monitor corporate governance practices of listed entities actively and sanction those which fail to uphold the best practice and reward those who excel. In this way, the Chartered Institute of Directors and the Nigerian Exchange Group are aligned in the drive to ensure sound corporate governance and ethical leadership in our institutions and our public companies. The theme, Governing for Sustainable Value, Evolving Board Agenda in 2026, and insight embedded in this outlook come at a critical time for our economy. As Nigeria continues its journey towards economic transformation and global competitiveness, the role of boards and directors has never been more pivotal. Beyond compliance, governance must now be seen as a strategic enabler, one that drives innovation, accountability, and long-term growth. The CIoD Corporate Governance Outlook provides practitioners an opportunity to remind ourselves of best ethical practices, review current insights, and guidance for directors, and be aware of current development in good corporate governance. This is why collaboration across institutions remains vital. We have seen the value of this firsthand through our ongoing collaboration with the Chartered Institute of Stockbroker Directors of Nigeria and other key stakeholders. The recent renewal of our tripartite partnership between the CIoD, Nigerian Bar Association, and the NGS reflects a shared resolve to continue raising the bar for corporate governance in Nigeria. Through this collaboration, we are collectively advancing a more transparent, disciplined, and resilient market environment. I am particularly encouraged by the forward-looking nature of this publication, which provides practical guidance for navigating emerging governance priorities. It is my expectation that it will serve not only as a reference document, but as a catalyst for action among boards and executives across all sectors of our economy. So on behalf of the NGS, I congratulate the Chartered Institute of Directors of Nigeria on this important milestone and reaffirm our support at NGS for initiatives that advance governance excellence in Nigeria. Thank you, and I wish us all a successful event. Thank you.
Thank you very much, sir, for that goodwill message. And from what he has said, it's obvious that corporate governance is everybody's business, not just the CIoDs. Thank you very much to all our stakeholders that have come today and giving goodwill messages. You're very much appreciated. We now turn to the central focus of today's events, the presentation of the 2026 Corporate Governance Outlook. So we're moving beyond theory into the practical and actionable. I would like to welcome Dr. Adeola Agbato of the Directorate of Advocacy and Stakeholder Engagement of the CIoD to come and give a presentation on the Corporate Governance Outlook. Adam.
Good morning, Mr. President, Otumba Adetuji Oyebanji, FCIOD, the first Vice President, Mrs. Amina Oyagbola, FCIOD, the members of the Governing Council present, our highly esteemed speakers and discussants, without whom this event might not be a possibility. Thank you very much. Esteemed ladies and gentlemen, I'll be giving a brief highlight of the 2026 Corporate Governance Report, and we have physical copies available for sale at the end of this event. So by way of executive summary, the Corporate Governance Outlook actually represents the observation of the Chartered Institute of Directors being the leading corporate governance institute in Nigeria for advancing corporate governance, ethical leadership. We observed a gap, which is the fact that while many organizations, they have economic outlook at the beginning of every year, they have events, they have publications. However, very few organizations have conduct a corporate governance outlook. And so being the leader the leader in corporate governance in Nigeria, we decided to do an assessment of the corporate governance space in Nigeria. Where are we? What are the gaps? And our recommendations. And so this maiden report of the Chartered Institute of Directors actually presents our outlook for the year, the corporate governance outlook for the year. And for this report, in our survey, we engaged board members and directors, C-suite executives, company secretaries, governance professionals, public and private sector leaders. And we assessed ESG and sustainability. As you know, ESG and sustainability is now in the front burner for many organizations, if not all organizations. Diversity and inclusion, executive remuneration, risks, digital and cyber governance, ethics, culture, and board effectiveness. And we gathered our evidence or data by structured survey, quantitative benchmarking, qualitative responses, executive interviews, and case-based insights. And this enabled us to be able to conduct cross-sector analysis, governance maturity mapping, trend identification, and sector-specific insights. And a key takeaway from this is that this corporate governance report moves beyond compliance metrics to reveal how governance is practiced, challenged, and evolving across Nigeria's boardrooms. And so these are some of the insights from our research. 100% of the respondents in our survey, have formal board evaluation frameworks. However, just like one of the previous speakers did mention that board independence remains lagging, and we at the CIoD, we have a register of independent board directors. These are directors that have been trained, they've gone through the CIoD, Independent Director Masterclass. And so for any organization that needs independent directors, we have a pool of board-ready independent directors at the CIoD. Moving on, only 42% disclose ESG metrics in their annual reports, and only 8% of our respondents have a dedicated board risk committee. Only 21% integrate sustainability targets into executive compensation. And lastly, 54% cite regulatory uncertainty as a governance constraint rather. As I begin to round off, from our case studies, our international benchmarking, at the CIoD, we believe that the following are the priority areas for 2026. Embed ESG into board strategy and performance metrics. Boards should strengthen director competency and continuous education, as we're all aware that the operating environment is very, very dynamic and very uncertain, and so directors need to be continually trained to be able to provide oversight. Enhanced regulatory coordination and enforcement consistency. Accelerate digital governance and frameworks. So from our study, from our research, we observed that very few boards have the competencies and the skills to be able to provide oversight for the emerging technologies that we are faced with. And as we all know that this technology will continue to increase, and so boards need to have the requisite competencies to be able to manage this emerging technological risk, because we all know that if they are not properly managed, they have negative consequences and impacts. And lastly, institutionalize board performance and succession planning. We all know that succession planning is very key, very critical for any organization for its long-term sustainability. And so even as I conclude, this maiden CIoD Nigeria Corporate Governance Outlook reports is clearly a shift in Nigeria's corporate governance environment. Governance is no longer viewed solely as a regulatory obligation, but increasingly as a strategic asset that shapes access to capital, just as been previously mentioned, organizational resilience, and long-term value creation. However, the survey evidence also reveals persistent gaps between formal compliance and effective governance practice. Addressing these gaps requires coordinated action by boards, regulators, and governance institutions, with a focus on enhancing capability, accountability, and credibility. Thank you very much for your attention.
Thank you, Dr. Agbato. We just want to take a minute to appreciate and acknowledge our sponsors for today's event, International Energy Services Limited, Russell Smith, and Energia, for their support in making this event possible. Thank you very much. We will now move to what promises to be a very engaging plenary session. And I would like to invite to the stage our moderator for the session, Mrs. Bimbola Wright, FCIOD. She's a distinguished Nigerian banking professional and corporate governance leader with over 35 years of experience in the financial services sector. With more than 2 decades of board-level experience, she currently serves as a non-executive director at EcoBank Nigeria and an independent non-executive director at ARM Securities. She is also the pioneer chairperson of Arami Essentials, an indigenous clean beauty company. I use your products, madam. Thank you very much. And previously served on the board of governance of the CIoD Center for Corporate Governance. She's built a successful career across leading financial institutions, including Nile Bank PLC, Kakawa Discount House, and FBN Quest Merchant Bank, where she served as head of corporate banking, overseeing key institutional relationships and complex corporate value chains. She holds a BSc in human biology from the University of Surrey. That's very interesting, madam. From there to banking. And an MA in international relations from the University of Kent, and has attended executive programs at Harvard Business School, the Wharton School, London Business School, and Lagos Business School. She's a fellow of the Chartered Institute of Directors Nigeria and the Nigerian Institute of Management, and a member of the CIoD UK and the Society for Corporate Governance. Her professional certifications include design thinking and project management. She's passionate about mentoring and coaching senior executives and supporting them in unlocking their leadership potential and strengthening responsible leadership. Thank you very much, madam, for joining us. Our first discussant who would be joining Mrs. Wright is Mr. I.K. Umbagu, FCA, HCIB, MCIoD. He is a seasoned finance and governance professional with over 30 years of experience spanning audit, tax, banking, and management consulting. He's a fellow of the Institute of Chartered Accountants of Nigeria and an honorary senior member of the Chartered Institute of Bankers of Nigeria. He also holds memberships in the Chartered Institute of Taxation, the Chartered Institute of Directors, and the African Business Integrity Network. He's currently the interim chairman of the Professional Services Sectoral Group of the CIoD Nigeria, and serves as a faculty member and lead independent external consultant with the IoD Center for Corporate Governance. He previously served as ED at Fidelity Bank, retiring in 2015 after over 2 decades in senior banking roles. He's now the founder and principal consultant at Cumbrian Consult Limited, a management consulting firm focused on governance, compliance, and performance improvement. He has attended executive programs at Lagos Business School, Harvard Business School, University of Oxford, and Kellogg School of Management, and currently serves on the board of several private institutions as an independent non-executive director. Please join me in welcoming Mr. I.K. Umbagu. Then, last but not least, we have Dr. Adeyinka Hassan, FCIA, FCIS, FCIOD, MNIM, ACIB. Dr. Adeyinka Hassan is a distinguished legal and governance practitioner with over 30 years of post-call experience in corporate law, financial services, and enterprise governance. He's the principal partner at H. Michael & Co., where he advises organizations on corporate governance, capital markets transactions, financial structuring, corporate restructuring, and commercial dispute resolution. His career spans senior advisory roles within the banking sector, providing strategic guidance on credit risk, regulatory compliance, investor relations, and operational risk at institutions, including First City Monument Bank, Equatorial Trust Bank, and Intercontinental Bank, now part of Access Bank PLC. He holds degrees from Obafemi Awolowo University, Ladoke Akintola University of Technology, London South Bank University, and Babcock University. He also serves on several corporate boards and is a fellow of the Chartered Institute of Directors Nigeria and a member of multiple professional bodies in governance, banking, and corporate administration. And please, may I add, he's also the chairman of the Young Directors Advisory Committee, which oversees the Young Directors Forum. So please help us welcome Dr. Adeyinka Hassan. We'll hand it over to you, Mrs. Wright.
Can you hear me? Okay. Good morning. All protocols which have been very clearly articulated, very much observed. From human biology to banking, very simple. After I'd done my degree, came home, I wanted to go into research. And an elderly uncle said to me, "You want to go and sit in a lab?" there's no money there. It's banking and you know, being very young, very impressionable, I didn't need any convincing. And that's how I ended in banking, no regrets. The context for this session has been clearly set. But I think once again, we should commend the Institute, the Chartered Institute of Directors, Nigeria, for a job well done. When I went through the outlook, honestly, I was so excited. Yes, a lot of it was reminding us about, you know, the need for governance, shifting from compliance to a more strategic role, but also a lot of eye-openers, you know, very practical, very easy to understand, and a round of applause to the entire CIoD team. So the question before us now is not whether governance exists. I mean, speaker after speaker has talked about the formal frameworks, but how do we ensure that governance becomes even more effective, becomes even more anticipatory, and obviously, ultimately becomes more value creating? We will ask if our governance systems in Nigeria are evolving fast enough to inform, in substance, not just inform, to deal with the increasing complexity of the world. If we even look at the geopolitical situation now, really, we knew it was coming because it had been threatened time and again over the last, at least the last 1 year, and perhaps in the first coming of you-know-who. But, you know, it's unfortunately seemed to catch countries unaware. So how are we evolving governance in a way that we can build that resilience to deal with shocks that we can anticipate and those that we can't? And with me here today, I have an excellent panel, IK and Adeyinka Hassan, to help us deal with these issues. And I will start with you, Dr. Hassan. The outlook, the CIoD outlook, suggests that in Nigeria, we're transitioning from compliance-driven governance to a more performance-driven approach. So I would ask you, what does performance-driven mean? What does it look like in practice on a board? And how would a board know when they're actually making that transition?
Yes, good morning, ladies and gentlemen. To directly respond to Mrs. Wright's question, I will allude to Nigerian corporate governance team. The approach is apply and explain. And simply put, what that basically means is that there is need for us to ensure we comply. That is one part. The other part is you need to also explain your process of compliance, which speaks directly to our question in terms of ensuring strategic approach towards achieving the whole essence of creating the code. Now, we've gone past the era where we put in place corporate governance as the box ticking exercise. We need to actually live through the two words and intent, purpose, intention of creating that code. So organizations need to actually live what they claim to do. So it's not just a question of ticking the box and telling the whole world that they are doing what they are meant to do in terms of just, so, and I will break it down. So I will look at the industry where I'm very familiar with, which is the financial services industry. They have their own corporate governance. I won't call it code, but guidelines that actually supports the specific framework within the industry. And what do I mean by that? There are issues that are peculiar to specific industries. And when these issues arises, sometimes the broad corporate governance code that we are aware of might not be enough to take care of the challenges. There are instances where, and I'll give you an example, public quoted company, for instance, Nigerian Code of Corporate Governance requires them to have a minimum of one independent director on the board. But if you look at what the Company and Allied Matters Act provides, it says, I think 3 directors are the minimum. Question is, how many of these public coded companies, if you are in a public coded company in this space now, confirm to us how many independent directors you have on your board? Most public quoted companies I have, we just manage to have one. So question is, what is the intent behind creating certain regulations? So are we just ticking the box to say we've appointed, or we're actually using that requirement as a strategic tool to achieve the intent and purpose of corporate governance? So I don't expect for us to answer the question in this room, but when we bear it in mind and we go back to our various companies, whatever we think afterwards will show us exactly where we are. But the effort we make as professionals is that any board where I'm connected with, I stand my foot and I insist. There is a reason why this is put in place. Let's not just do it because we want to take the bus, but let's do it right so that we can achieve the desired objectives. Because in the long run, it will show how effective your board is. And then the returns you get, which actually goes beyond profitability, if you ask me. A lot of people see profit as success. Profit is actually not success in the real sense of it. How sustainable is your organization? I mean, without actually selling any organization here, there is a reason why some organizations here within Nigeria are over a century old. There is a reason why some organizations, they will start very well, and then you remember those days of banking that we used to call them new generation bank. A lot of them, where are they today? You know, and some of these challenges still remain with us. But it then behoves on us as members of board to ensure that additional responsibility is required of us. There is a list of probity of directors that directors need to always ensure they put in place in any board where they belong to. I think I'll stop there for now. Thank you.
Thank you very much, Dr. Hassan. Before I move on to IK, you talked about the various codes, right? All perhaps drawing from the Nigeria Code for Corporate Governance. Governance is not meant to be, or rather compliance is not meant to be a chain code. It's supposed to drive value, supposed to help shape better quality decisions. But when you have a multiplicity of codes, is that, and it's a good thing that we have regulators in the room as well, is that necessarily a good thing? You know, what are the pros and cons? Because, you know, sometimes there's a sense that maybe they're contradictory or confusing. Can you speak to that?
Okay, so on a lighter note, I remember when we were in secondary school, when they teach you economics, for every concept, they will teach you advantages and disadvantages. And that is the approach I'm going to give this. Now, having multiplicity of code has its own advantages and disadvantages. But in my own opinion, I think the advantages outweighs the disadvantages, and I'll break it down. First and foremost, I have Mr. Osawe here. He won't agree with me that we have multiplicity of code. And quite frankly, Nigerian Financial Reporting Council made it clear. We have only one Nigerian Code of Corporate Governance, 2018. I'm glad to hear that there is still going to be some form of improvement on it before the end of this year. So what we had
as various codes, that were applicable to various industries have now been converted to guidelines, basically guidelines, to address specific issues to various industries like banking, insurance, telecoms, pensions, and the rest of them. But Nigerian Code of Corporate Governance still remains the super code and the only one code in Nigeria as of today. So the other codes remains guidelines, that actually addresses issues relating to those specific sectors. Now, coming back to your question as to advantages and disadvantages. Now, so there are instances where, as operators, you might find yourself in a dilemma. What Nigerian code is required, or the requirement of Nigerian code, might be slightly different from your specific industry guideline. As practitioners, what we always advise clients is, consider the two. This is where self-regulation comes in. You need to look at the stiffer position and apply that, such that you are not caught napping at any point in time. I was addressing, we had a meeting with the leadership of NICOM yesterday. And when I was discussing about corporate governance code of our board, corporate governance application on our board, I said to them, look, if the commission requires this much, as a board, we require this, such that, and that is what I describe as our own self-regulation, so that if for any reason we come short of what we require on our own board, plus or minus, we are still within what the commission requires of us. And it makes us look good to the commission in the long run. And if we apply it in a wider sense, that is where I say the advantages of having multiplicity, if you call it code, but I call it guidelines. The advantages outweighs the disadvantages, because there will be clearly certain things that are applicable within your industry, and that will actually give you the opportunity to set higher standard for yourself and do a lot more than what Nigerian Code of Corporate Governance requires you to do. Thank you.
Thank you for that clarification. Clearly, we're misrepresenting codes as, misrepresenting guidelines as codes. Apologies, Mr. Osawi. The report speaks very strongly about the independence or lack thereof on boards. Why have we had difficulties in achieving true independence on Nigerian boards? And what role would diversity play here? One of the goodwill speakers but the fact is, yes, diversity, there's been a lot of focus on gender, but we've also got to go beyond that. There are other aspects of diversity, especially in a country like Nigeria. So how can we begin to achieve that level of independence, given all these factors? Thank you.
Thank you. Thank you very much, and good morning, everyone. I think when we talk about diversity, I mean, like Bimbo has mentioned, there are so many areas of diversity. There's age, there's skills, there's independence even, and there's gender, of course, which is the one that stands out, most of the time. It has to be intentional. I think one of the speakers mentioned that when you talk about boards, you have to be intentional when you talk about composition. And one of the key aspects of composition is that diversity. One question that arose from what Bimbo said just now is that how can we have more independent directors? The culture that we have in this environment is one of the, if you like, is one of the things that stops us from having a lot of independence. Many of us are part of one community or the other, one family or the other, and generally we tend to gravitate towards those who are close to us. And that is something that removes that independence that we're looking for. And therefore, sometimes you have to look at the regulators as well, because the regulators need to perhaps also enforce that independence. There has to be more due diligence when you're talking about independence. Because when you say independence, you say there are clear rules for independence, not more than 1% of shares, no direct relationships, etc., etc. But the truth is that there's substance and there's form. So the more we have regulation enforcing some of these rules, the better. And indeed, some of the companies that we have in Nigeria today are beginning to reap the benefits of complying with, if you like, global rules. There are places where these rules are applied very stringently. And therefore, I think that apart from the fact that when corporate governance also moves from compliance to stewardship, and when we begin to see the benefits of increased corporate governance, we will then begin to apply those rules without necessarily just looking at compliance. Thank you.
Okay, thank you. You know, culture plays a very big part of life in Nigeria. Let's just going back perhaps to to diversity. So youth, for example, are in a room with the older demographic. Our culture dictates that you don't challenge those older than you. In fact, when you walk into a room and you have to kneel down to greet somebody older than you, then you sit down and you want to begin to challenge. You know, it's difficult, even for women, right? There's still perhaps a bit of the, I have your type at home. So what would you say? What advice would you give to those who would help to make a board more diverse?
Thank you very much. And this is a very, very, very relevant point. I think we were, just to give an example, we were at a board evaluation sometime, I think last week or thereabouts. And when I looked at the board, I saw that I think there were just maybe 2 people that I would have classed as being under 65, 70. Some of us, of course, are near that as well. And in this room, indeed, I think Bola Ajumale mentioned it, that he would have loved to see some under 30s. It's part of when we talk about culture. The elderly are holding sway right now. We're still dominant as far as, you know, maybe the national discourse is concerned and the things that go on. It still has to do with, you know, being intentional about how we recruit directors, for example. One of the recommendations that we're always making when we conduct board evaluations is that the board must have a diversity policy. That diversity policy must indicate the diversity that we're talking about. If you look at certain parts of the world, for example, that diversity has actually helped them, not to say that I'm denigrating men or anything, but if you look around the world and you see those countries that are ruled by women, for example, during the last decade or so, when you talk about COVID, when you talk about the financial crisis, and you talk about some of the things that have happened in the world, those countries have actually done better. It doesn't require any survey to know that the Scandinavian countries, New Zealand, Norway, etc., they've done better. And then boards that have more diversity, whether you call it women or young people, but mainly gender, have also performed much better. During COVID, there was a report by the Financial Times which talked about, you know, the countries that have thrived during COVID. If you look at those boards, you will see what I'm talking about. I don't need to start mentioning them here, but if you go back and check, and even in Nigeria, you can also see it. So there's a lot of benefits in diversity. whether it's gender or whether it is age, and even in geography, because that's also diversity. If you have different parts of the country represented on your board, you tend to find that there are advantages in that, even if some of those advantages are political, but it helps. So it's more to do with being intentional about what we do. And of course, this falls on the Nominations and Governance Committee to make sure that, they do this the way it should be done.
Thank you. I would just say preach it. But talking about board compositions, CIoD has an excellent faculty. They run some incredible programs. I've attended a few. Now, they're not actually emerging risks anymore, but AI, cyber, digital, all of that, they're with us now. What should boards, Mr. Dr. Hassan, be doing to rethink their composition? We've talked about diversity, but for sometimes boards feel that continuous education of their directors is enough. Is it really? What should boards be doing to handle these risks?
I'm glad about one fact that corporate governance terrain in Nigeria over the years has evolved from stage to stage. And if we will score ourselves, we will score ourselves well. And thanks to regulators like Financial Reporting Council, CBN, NGX, NICOM, PENCOM, and the rest of them. And of course, thanks to an institute like the Institute of Directors, because we've covered mileage within my years of working with the institute. So now I think we've gone past the era of paying credence to merely continuous education of directors. And I think the fall starts from the lacuna observed in law. If you look at the definition of who a director is, simplicity, it says, Kama says, director is anybody appointed as director. Lawyers are here, so you can. If you look at it critically, vis-a-vis the responsibilities bestowed on that person called director, it is not just enough for you to be appointed as a director to direct the affairs of the company and say you are a director. Kama actually disengage, explaining what should be the qualification of that person appointed as a director. Instead, Kama only emphasizes the people who cannot be directors of the board. Good enough, but I think there should be a bit more. So for policymakers, I think it's an area where we need to pay attention to. Now, that said, we've reached an era where we've been talking about AI adoption. We are talking about IT governance. Is it enough just for a director to be sent on 2 or 3 day training to understand and then be able to apply? So I think we should actually professionalize the engagement of directors. There is an attempt towards that by IoD, because now in IoD, we have what we call independent director register, but it should be a lot more than that. But I mean, it's a good start. It can be improved. So now what am I saying? We are talking about AI adoption. Somebody was talking about diversity, and we are looking at age diversity. Now, given what the last speaker said, sorry, the gentleman, my colleague said, is my model, IK. So he said when he went to do board evaluation, he found that on a particular board, the age range was like 50, 60 and above. Let's be honest with ourselves. With our volatile business environment, how much contribution, apologies to the people within that age grade, can they make in terms of AI adoption and IT governance? It's limited, let's be realistic. But where you have an organization with younger people, AI adoption is part of their life. If I was talking to my daughter, I said, I don't like this kind of job you are doing. She works she does HR in the UK, and she goes to work only once a week. And by the time she finished analyzing it, even me, I'm beginning to adopt the style. You know, so there are quite a number of things younger generation will introduce to you. And imagine how much you are losing on your board if you don't have these ideas and such people. And that is why, for me, I will advocate professionalizing even the process of recruiting directors. There are certain level of qualification that a section of the directors on the board should have. There are certain level of ingrained training beyond just continuous education, attending 3-day or 4-day program, you know, that anybody that's going to be positioned as a director on the board of any company, especially with public quoted company or any company that has a reporting obligation to regulators. So we need to begin to think in that direction and actualize it. Thank you.
Okay, thank you very much. I'm going to move back to IK. We've spoken about digital AI, but another area is ESG, right? The level of awareness is growing. And indeed, some of the guidelines, even the code, speaks to reporting requirements in this regard. But what do we need to do in this country to move ESG from a reporting obligation to something that will drive strategy and capital allocation?
Thank you. Thank you. And thank you indeed. I think one of the things that needs to be done is actually to link ESG to the executive compensation. Because when you do that, then you will enforce compliance. You start with compliance, and then you can then move towards strategy. You know, because most of the time you find that if you don't have a policy or a rule, we tend not to address those issues. For instance, I think NGX now has guidelines on sustainability, and it has been there actually for 3 years now. Now, ask yourself how many companies are, fully complying with those guidelines. Not so many, and indeed the survey shows that it's still an area that is lacking. The only way that you can do it is actually to enforce by linking it to performance. When you link it to performance, in this case, we're talking about remuneration, for instance, for the executives, then you will begin to see, clear compliance, and then it will form part of strategy. And even in the board evaluations that we conduct today, we actually insist that ESG is paid attention to as far as strategy is concerned. We look for that linkage in the broad strategy with ESG. So ESG is something that many people, I would say, possibly misunderstand to some extent. Because if you look at ESG, sometimes you think the S stands for sustainability, but it's environment, social, and governance. Now, sustainability itself depends on those 3 key elements. And if you read further, you'll find that the United Nations has Sustainability Development Goals. There are 17 of them. And all those goals, if you go back to ESG, you will see that they're all there in ESG. You have education, you have climate risk, you have hunger, you have clean water, and so on and so forth. So ESG needs to be made a part of the executive compensation if you are to force that compliance. And then from compliance, you can move to strategy. Yep.
Thank you. And, it's, directors have a major role to play here. The CBN guidelines, there's got to be ESG related reporting, but it's usually the last slide. And by the time you get there, you're tired. Okay, fine. Thank you, noted. Go on. But it's got to be something that you really embed into the strategy. But I'll just stay with you for a second. We talk about tools like scenario planning, stress testing. I mean, these are expected to help organizations build resilience and sustainability. But they're just tools that really are hardly used. What can, from a governance framework, what can be done to really milk the opportunities presented by these tools?
Thank you. So scenario planning, just for clarity, simply involves, creating certain circumstances using assumptions to define those circumstances. So in the banking industry, for instance, those days when we create scenario planning, what we do is you have a best case scenario, you have a middle case, and you have perhaps a worst case. Now, those scenarios are used to plan your future activities. And you say to yourself, for example, that if inflation is at its lowest, for example, then, this is what you will do. If exchange rate gets as bad as 3,000, to the pound, for example, this is what you do. So those scenarios help you to plan your future activities as an organization. And you can do it both for financial and for non-financial. So for instance, you can look at your staff members, and if you look at staff turnover, the reason why you have planning for your staff is so that you can plan for people leaving the organization. So for instance, today with the JAPA syndrome in IT, most banks have lost their key IT staff. Now, if there was no scenario planning, you would find that the bank is probably empty as far as IT is concerned. So today you find that they've been able to replace to a large extent. A few organizations suffered more than others, as we know. But the scenario planning is both from financial point of view and a non-financial point of view, from a risk point of view. So when you talk about risk, you're talking about whether it is financial or credit risk and so on and so forth. So scenario planning helps you to look ahead and to decide what you need to do in order to remain a sustainable institution. So you can link scenario planning to sustainability, actually. And that is actually, when we're saying scenario planning, that's what it is all about. I think you mentioned earlier, people, planet, and profit. So people, planet, and profit simply means that when you're looking at performance for an organization, you look at financial, you look at non-financial. And those are the things that you need to do when you are carrying out scenario planning, just to make sure that you are sustainable as an institution.
Okay, thank you very much. One of the young directors is distracting. I mean, you've spoken to the huge benefits, of these tools. Dr. Hassan, what, in your view, are the key elements that will define a high-performing board in Nigeria?
So I'll start with the last point Ike made. And I take it to saying that beyond performance, there's something we also call incentive. Because incentive would also encourage boards of organization to even do more than they probably plan to do when they know organizations like Financial Reporting Council is creating incentive for them for compliance, then it will encourage them to even do better. But that said, beyond that, what would give you effective performance on your board, or what will make your board be categorized like an effective board boils down to culture. So there is this book titled The Fish Rots from the Head. So if your culture as a board is the right culture, you will get it right throughout the organization. So that is why for me, in quote, I say every organization is as good as the board. Because the board provides leadership. The board provides oversight. And in doing all of this, if you have a culture, I don't know what adjective to use now, but let me take it the other way. If you have the right culture and you have ethical culture, or what I call ethical leadership, it's going to transcend throughout the organization from the board to management and then to line and serve. And then the quality of the organization, the output you will see in the organization will be different. And I'll make a very good example, which is with us. Look at MTN today. Everybody is impressed about the profit performance of MTN. But if you look at the culture of that organization, you will realize that things are certainly going to be different. The output will be different. So what determines effectiveness of a board starts with the culture that permeates within that board. And that is why things like ethical leadership, high standard, high integrity, you cannot take it away from a board that is effective. So the message is, if you want your board to be an effective board, then there are certain things you need to be looking out for. And one of them, in fact, that stands out the most is the issue of culture. What kind of culture are you integrating within that board? And that will determine how far you can go. Thank you.
Culture really is what we need to make that shift from compliance to stewardship that you spoke about. All right. I think we're going to go into Q&A very shortly, but before then, I'll just ask Ike, and then I'll come back to you, ask the same question. If you could change one governance practice in Nigerian boardrooms today, what would it be?
Okay. I'll say it's a tough one. There are so many practices that, one could change, but then I guess that we can just go back to, what Yinka has just said. It has to do with the culture, really. It has to do with the way that we view our role as directors. And I think that when you talk about that, it has to do with it's not an easily tangible element. It's to do with the view that you have ownership. So I would say perhaps ownership practice. Treat the board and its activities as something that belongs to you. Because if you look at your self-interest, you're not going to do things usually to harm yourself. Therefore, if you're talking about that practice, there has to be that ownership. That's what I would use. Related to culture, obviously, the way.
Thank you very much. Dr. Hassan?
So for me, actually, there are two things I would love to see change in the corporate governance space in Nigeria. One is, can we legislate governance? As Nigerians, we are very tough people. I remember, I think it was during the era of Fashola in Lagos, when they were trying to remove Okada riders, it became intense, and the government was paying a lot of attention to that. And, on our streets, you hardly see, challenges, because at some point before government decided to take a decisive action, on a daily basis, hospitals were, if you get the data of people dying of various or needless accidents, and he was able to establish it, and we got it right. And I'm borrowing from the legislation of governance in the United States, where they have Sarbanes-Oxley Act. It's a law. So, but maybe because of our British orientation, we seem to still enjoy, apply, and explain. But I think we need to be thinking even higher than that at this point. So that said, the second point I would like to see change. If our regulators, they've done a lot of work. Otherwise, I mean, I remember in the mid-90s to late 90s, the kind of challenge we have in the banking industry. Things are different within the industry today. But if we can go a step further to incentivize compliance, it's going to help a lot. Because I work with some of these organizations who have regulatory reporting requirements, and the kind of things we get when we do board evaluation, for instance. I remember a particular company, the submission of their board evaluation was due. Few days before it was due, they rang me and said, "Oh, we want you to do our board evaluation. Is it possible for you to get it for us within 2 days?" And I'm like, do you think it's just a report writing? You know, because when we want to do board evaluation, it will bear me witness. Even the promptness of your directors, they are giving you responses, determines how far it will take. I've had a board evaluation that we did for like a year. After a while, I wrote to them and said, I think I will refund the advance payments you made. We cannot continue with this brief because your directors are refusing to respond. That same board, the following year, they asked us that we should do their board evaluation. And what made that change? They realized that this evaluator is not joking. And with the way, the approach we give, insisting that things must be properly done, we can't just conjure reporter. And I told them, I said, look, the quality of the report I write, when your regulators review, would say something about me. So it's really not about you anymore. It's actually about me. So we have to get it right. So if we get to a point where we now begin to incentivize compliance, it will actually prompt action within the regulated entities. Thank you.
So incentivizing with the carrot and the stick. Yeah. Okay, I will just add one more perspective. The need to move from, board meetings being about reading reports and to really engaging in deeper strategy questions, spending more time on the future as opposed to the past. Yeah. So now we'll open up for Q&A. I don't know, are we starting online, the room? I'm just very mindful that online participants tend to get forgotten. Okay.
Good morning, everyone, distinguished directors, friends, and colleagues. I just thought, to ask a question around, since we're looking at the outlook, to just touch on if the speakers could make a comment around, the control environment and the establishment of governance structures and processes that would be applicable as we move forward into the future.
I don't know if we should just have 2 or 3 questions.
Do we have any other questions?
While we're getting that, we'll go to Dr. Hassan. Do you want to take that, the control environment?
Sorry, MVP, if I get your question, you are saying something about control environment. What exactly?
I mean, is that when you talk about corporate governance, you're talking about the structures, the processes, and the controls and the frameworks. And I'm saying, since we're talking about the outlook for the future, is there anything that as directors we should, keep in view in that respect? Thank you.
Thank you very much, MVP. I think as directors, if we look at the corporate governance framework within I would put it in sectors within the industry you belong to. First, when you are appointed as a director, it's important for you to understand the regulatory environment. It's not a jamboree, it's work to be done. Gone are those eras where you get excited and you are looking at how much they are paying you and all the associated benefits. Those ones are still there, but it's a lot of work required of you. Starting with understanding your regulatory environment. And I always say this to directors, one of the key responsibilities you have is to probe. If you don't probe, things will slide. Interestingly, I'm one of the faculty members in CIoD, and I facilitate. And then when we talk to directors, participants, I tell them, look, as a much younger boardroom player, there were certain things we had done that even today, when we reflect, we realize that these are not the right ways to do things. And I give an instance. Your MD will look at you in the face and say, Company Secretary, isn't that so? And you will nod your head and say, you are right, sir. Meanwhile, the MD is telling the board lies. So now today, as a mature boardroom player, you must be ready to ask questions. And when I say question, it's not just asking questions for the sake of it. You must be strategic in everything you do. And those questions will throw up a lot of things that will help you in making certain decisions, and it will determine the quality of your decision making. And when we talk about control within the organization, even within the boardroom. So I'll give an instance of insurance industry now. We have what we call risk-based supervision. What is the risk outlook of that organization looking like? What is your risk appetite? Are the board members well aware? And if indeed they are aware, what kind of control measures are they putting in place? If for any reason you don't even understand, so there is a provision in law that directors are actually allowed to get consultants to review and express opinion in the process of decision making, and the organization will take responsibility for the cost. It is something that is available to us as directors. So in putting appropriate control in the boardroom for the organization, directors themselves need to be well informed. You can't be a director of a financial service organization, for instance, without understanding the risk associated with the business of that organization. And this is where risk management becomes strategic for directors. Thank you.
And I think, even going beyond the controls, what's the accountability framework? So you set the risk appetite, but where there are breaches, then what happens? And, are the number of breaches increasing? Why? So yeah, controls plus accountability around it. Would you like to chip something in?
I think she was asking about the structure, governance structure. So there are departments that need to be there from day one. There are committees that need to exist. So when you get onto a board, some of those first things, just as Inka was also mentioning, the regulatory requirements that are there. So you have the board audit committee. If it's a financial institution, you have a risk management committee. In the management itself, you have a compliance officer, you have a chief internal auditor. Depending, of course, on the size of the organization, you don't have to have all these in every organization. In some of those organizations, you can combine the roles, even though that may not be the best, in the long term. But at least to start with, you need to have certain departments, certain structures, reporting appropriately, either to the managing director or to the board audit committee or the board risk committee. So those are, if you like, practices, policies, and procedures that first need to be in place, and then you can then be talking about what they actually do. So you start with those, and then you move on to the actual performance.
Thank you. You spoke about the committees. Actually, one thing that I found surprising in this report is that only 8% of those surveyed have a risk committee. Maybe because I'm in financial services where you have to have a risk. That's surprising, but I'm sure CIoD, it will be an area that they would work with boards on. Any other questions?
Yes, good afternoon. So thank you very much for the panel. My name is Neko Kikaru, Enterprise Women Center, and I'm representing the small growing business segment, which we always seem to forget when we talk about governance. So I just wanted to ask, and that's from any of the panelists, including you, the moderator, if there are any quick governance frameworks that you can share for small growing businesses, so the entrepreneurs, and why do you keep leaving them out of the conversation?
I thank you, Neka. After this session, I'll see you. But frankly speaking, I think we should commend Financial Reporting Council, honestly. I went for a session organized by FRCN and Integrity International, and then they gave us a document, it's actually in my car, called the Corporate Governance Guideline for MSMEs. Yeah. So that addresses your question. And when I read through the guideline, I said, this Financial Reporting Council, they really mean business. So, however, the downside is the fact that they didn't do enough publicity, because I didn't get to know about it until I attended the session. And they told me, oh, it's been with us for so long. This is a copy for you. So please take it home. You need to do a lot more with regards to publicity. Thank you.
And in fact, interestingly, I moderated the session on the exposure draft for the MSME governance. But it is important, as was mentioned. I am a pioneer chair of Arami Essentials, which, female founded. It was barely 3 years old. It started as a side hustle. The founder had a full-time job, side hustle, and it started when I told her that you're going to have to take a decision. You can't serve two masters. And it's amazing how just having that governance framework, and I'm glad because she's very young, but she sort of understood the need to inject governance and be accountable, and it was transformational for her. But there is anyway, Dr. Hassan has said he would be your consultant in that regard. All right.
Okay, we have quite a number of questions online, so we'll just take some of those and then we'll come back to the room, if that's okay.
Okay, you're going to ignore the
YDF. Well, like we said, our culture needs to make room for the young people. So let me take the YDF chair. Thank you.
Thank you very much for that. So I just wanted us to, on the issue of diversity and composition for you, I don't think it was really emphasized in terms of navigating, maybe for companies, how do they navigate? Maybe when you have the really older directors and you have to bring the young ones on board, how do you navigate that relationship? Or in terms of nuances, cultural nuances, you get on board and maybe a younger person is saying that somebody's feeling like, okay, well, maybe the Gen Zs are bolder than the millennials, so they can open up and just, without caring about whose ox is God, but maybe how can companies begin to navigate? How do they, in terms of, well, you have younger people now, so you should be ready for things that may not really, but yes, that's just it. Thank you.
You want us to take the answer now? Or, yeah, well, I mean, it's all to do with what we call board dynamics and the interactions between both the old and the young. One of the things that we used to do was to encourage informal gatherings, especially maybe retreats, things like that, where people can begin to speak freely and interact with each other. You find that it changes the dynamics entirely, as opposed to sitting in a boardroom where you're just talking the business, and you find that the young people sometimes may not speak up, but I'm glad you said that the Gen Zs are a bit more, audacious. Yes, that's the word. So it's to do with dynamics, and every board should have a chairman that actually works on that interaction. It's the duty of the chairman to make sure that there's inclusion in the discussions, inclusion in the decision making. Because if you don't have that inclusion, you have a situation where people begin to, they'll complain, maybe not audibly, but they will complain that they don't get a chance. So it's to do with the interaction and the dynamics. And the chairman really has that responsibility to encourage the right kind of dynamics. And I don't know if you've heard, there's something we always say, that culture eats strategy for breakfast. So where you have a board that the culture is that the young people keep quiet, then of course the board will remain quiet.
Okay, I actually sit on a board where we have a very young director. And yes, there was that sort of reticence. Be quiet throughout the meetings. So I took it upon myself to informally mentor her, reach out to her. What are your concerns? What are the issues? And, help to build confidence. And now she participates just as well as any other director. So I think, even aside from the chairman, other directors could notice the gap and try to help. No director is perfect. We have our, developmental areas. And if you see that gap especially the young ones, then step up and help.
Well, my addition to that would be, so this thing we call culture is a pattern of behavior that we have at some point agreed to accept, and then we begin to run as culture. And what that tells me is that culture also evolves, right? So once upon a time, maybe many centuries ago, in Yoruba land, if you want to marry, they actually, when they say for the people who understand Yoruba, you actually just arrange with the parents of the bride to go and carry the bride one night and take her somewhere. I read it somewhere. Then after a while, it evolved to a point where they call it betrothed. Families will talk and then they will arrange that this boy is going to marry this girl when they grow up, And over time, things have changed. Even now, I'm seeing new trends, at weddings, and I'm like, things have really changed. So now bring it back to corporate governance. Culture will evolve over time. The older directors have their own benefits. And this is where I talk about multiple viewpoints, the benefits of multiple viewpoints in a boardroom. The older directors have wisdom. The younger directors would need to wait a number of years before the Yoruba will say, where I'm sitting as an old man, what I can see, even you that you are so tall, you will not be able to see. However, younger directors also have the benefit they bring on board. If it takes older directors 6 months to learn AI, younger directors, it would take them just a number of days. And when they apply this to the business, there is something it brings to the business. And I'll give you an example, which is not far from us. CIoD, some 8-9 years ago, was deliberate about infusing young ideas within the system. And some of the leaders came up with the idea of making Young Directors Forum a CSR arm of CIoD. And they were deliberate about it. The story 8 years ago is not the story today. I mean, I'm able to speak to that because I was the chairman of the steering committee. I know where we started from, and I know that we are moving. So we keep on improving with time. But the key point I want to make here is that for us as directors on board, let's be deliberate about ensuring diversity and inclusion, especially with young children. Look at what is happening with the banking industry. CBN made it a requirement that 30% of members of the board should be women. It was a struggle, but go to the boards of banks today. In fact, the women are taking over. If you look at board of, I don't want to mention the bank. So somebody was talking to me about making recommendations to the board, and they said, we don't even want we don't want women again. And I said, why? They said the whole board is like all women. If you go and search the banks, you will find out the bank I'm talking about, that the whole board is now full of women. So we've reached that level. And I believe that if we are deliberate about it on our various boards, we'll certainly achieve it. Thank you.
So do we have?
Thank you. We have several questions. We'll start with the light one. Since we're talking about ages or the age diversity on boards, someone asked a question. Since a lot of the directors on our boards are over 50, should board charters formally incorporate director well-being into their meeting design? I don't know if you want to respond to that. Directors' well-being, should it be something intentional that the company must take up, given the age of the board?
Well, I can respond to that. So I went for a director retreat. I was a facilitator. And because we were trying to manage time, I told them, oh, let's not go for lunch. Some people were excited. They wanted us to continue. But somebody came up and said, we need to observe HSSE, that there is need for us to get up, walk around. We shouldn't just sit for too long and get carried away. It's all part of well-being for directors. So we need to be conscious about it. These days, you hear somebody just, within the last 3 to 4 weeks, to be honest with you, I know at least 4 people. One of them I saw at a burial last week, and I just received a message some days after that, oh, he just passed. And I'm like, I saw this guy, he was looking very healthy. He was heart attack. So as directors, our well-being is very important. So I think it's one of the things we need to pay a lot of attention to. Head legal, which used to be the fashion. And people make that mistake that every company secretary is meant to be a lawyer. No, it's not so. There are company secretaries who are chartered accountants. Even Nigerian Kama actually qualifies who can become the secretary. And one of the reserved for lawyers. But that said, company secretary is pivotal. So company secretary has to be, like I say, when I do company secretary training, I say one person who knows a lot about everything. I remember the joke in those days when I was still in the bank. I was company secretary, and then they withdrew as part of austerity measure. They said they should stop buying newspaper for every head of department. And you must attain a certain level. And what that does is that you are not easily persuaded. company secretary has functional reporting line to the chairman, but somebody does the appraisal of the company secretary in the organization, who the company secretary has administrative reporting line to. So if the company secretary were to just be a deputy manager or a young officer, the MD can just dissuade the company secretary anyhow. But if the person is a top level person, it will be difficult for the MD to move the person around like a toy. Thank you.
Yeah, just to add to what Inka has said, the company secretary today is actually the chief corporate governance officer. I think that's, it's accepted now. So is in charge, or she's in charge of corporate governance. And indeed, it's the board chairman that evaluates the company secretary annually. And of course, that evaluation needs to be shared with the board, because the board is actually where the company secretary reports. The only reporting that the company secretary does with the managing director is administrative. Okay? So that has actually brought a lot of conflict, where the company secretary feels that he or she is not being given adequate independence to be able to do that. So the company secretary is indeed, a very important aspect of corporate governance.
Okay. Curious as to why the oil and gas industry does not have corporate governance regulations as some other key industries, e.g. banking. Is the FRC considering this? I think I'll take all the other questions because they're all related to the FRC and the corporate governance code. So how practicable and seamless is it to apply the NCCG across board throughout the country? And then while codes like the Nigerian Code of Corporate Governance emphasize effectiveness, do you think they should go further to provide guidance on meeting structure and duration? So those three questions.
Okay, so, well, I will make attempts to answer, but I will still hand over the mic to the Chief of Financial Reporting Council here. So the question about petroleum industry, we are aware of a Petroleum Industry Act, and I think they have various regulators within that industry, and they all have a market regulation, which, if you like, call it their code. But again, whatever code will provide is what these market regulators are already providing. But I will hand the microphone over to the Chief Financial Reporting Councilman with us.
Okay. Now, I actually told her I wanted to make a few comments, especially in the area of multiplicity of codes, guideline, and all of that. But I think this question will make me answer that right away. Now, in coming up with the NCCG 2018, of course, it wasn't just an FROC thing. Prior to that, of course, all of the various codes that used to exist, those who were the primary regulators that had codes were all part of the technical working group that came together to, eventually come up with the NCCG 2018. So it would be right to say we're now having a situation where one code is what everybody now had. But of course, we also recognize that for some of these sectorial regulators, they had specific things they wanted to address. And that is why there was that understanding that they now convert to guidelines, also attending to the specific needs of their sectors and industry. For instance, there are examples I was just giving here a while ago. Issues around, each time we talk of diversity, inclusion, inclusiveness and all of that, if you check the NCCG 2018, it just gave you, what you can call baseline minimum expectations in terms of a percentage, like the CBN had, put 30% and all that. The NCCG 2018 never said that, so that the regulator can make that specific prescription. Of course, independent director, we said it is necessary to have at least one. But of course, in the wisdom of the other sectoral regulators, they can say, okay, we need 2, we need 3. That, of course, is not what FROC targeted when coming up with the NCCG 2018, and of course, with the revision that is already on ground. Now, For the oil and gas, we do have regulators. In fact, one area that we have identified in this, need to do a review is that we are talking about what we can do as far as oil and gas and related energy areas are concerned, because we recognize that we don't have, just like you have the NCC having their own, the CBN, the NICOM, we currently don't have one in that space. So we are working with them. We are talking to NUPROC and the like to see whether they can give us something that we can work with, and of course also encourage them to perhaps do more work and perhaps introduce stricter measures if there are needs. Otherwise, we bring them on board into the review of the NCCG 2018. So that, of the revised code that will come up very shortly. That also speaks to the issue of conflict. There's really no conflict. I think 2025, SEC did something, we had an input in that. So we're all working to ensure that, remember, the NCCG 2018, it's for what we have defined as PIE, which of course is far more than what the various sectors are regulating. So to a large extent, that code is supposed to be for all those that have been scoped in, whereas for the sectors, it attends to the ones that concerns them. Then on ESG, as rightly put, you see, what we have done so far, I think we work a lot with NGX. A whole lot of things have been going on concerning sustainability reporting. We thought the way to go would be to, first of all, push advocacy. And that is why, in our roadmap, in the roadmap that is a joint roadmap too, the first thing was to use those that you will call sustainability champions. Entities like CEPLAT, MTN, and all of that, as those who were like early adopters. They were already doing a whole lot. So we needed to use them to showcase the fact that, look, this is the way to go. Now we have a roadmap that puts 2028 as the mandatory year. But in between, we are, pushing for those entities that know that they will eventually be mandated to do it, to enter into the voluntary space. So that's what is happening right now. And we think from advocacy, of course, using the champions that we have on board, the issue of compliance monitoring through reporting will first of all come in. And then, of course, I agree that at some point in time, it has to become a strategic tool by entities. So that's the way we think this should go. And at least we are pushing it to the best of our ability. Thank you.
Thank you very much, sir. I think we'll end on that note. There's still a few more questions, but in the interest of time, unfortunately, we have to move ahead. Can I please just ask that you remain on the stage while I invite our president and chairman of Governing Council to please come up for the presentation of the plaques to the moderator and the discussants. Mr. Chairman, if you don't mind also joining the panel on stage so we can present plaques and take pictures. Thank you.
I hope these plaques are compliant. Well,
please, I'm so sorry, sir. Please, sir, if you don't mind joining, and Mr. Osawe as well, other members of council, please, to support our president, Mr. Ojamale, please. Thank you so much. And the YDF chair.
Don't leave
the young people.
It's not a real inclusiveness.
Well, the other thing I should tell you is that there's no free lunch. So since you have joined me, you will support me in carrying. So, Mr. Jude Chiemeka, MCIoD, proudly so. But we need to see you more. Please.
Noted.
Okay.
I'm taking notes. If it's not coming, let me know.
Please put it in the appraiser.
Done. Done.
So it's my pleasure to present this to you in appreciation of your presence and role as the keynote speaker today at this Corporate Governance Outlook launch. Thank you very much. We really appreciate your insightful comments. And hopefully, like I said, you'll be much more involved in what we do going forward. Thank you.
We have vacancy in young.
Does it look like you?
No, advisory committee.
Well done.
So, next one.
Well done. Well done. So on behalf of CIoD, I hereby present this plaque to Mrs. Bimbola Wright in appreciation of your presence, our role as a moderator at the Corporate Governance Outlook Launch 2026. I'm doing that on behalf of the President. So I'm taking that privilege, not only as the chairman of NGS, but as a council member of our CIoD. Congratulations, and we're proud of you. Well done.
That's how it.
Is this faster than the big one?
Okay. Yeah, it's for you. Okay. Well, I'm doing this also on behalf of the President and Chairman of Council, Chartered Institute of Directors, to present to Dr. Adeyinka Hassan, one of our discussants, for at least speaking to the subject matter and, of course, enlightening us the more. I want to say congratulations on behalf of the CIoD and, of course, the President having given me the opportunity to do this. So.
Interesting. This is interesting. Before I do the formal presentation, Ike Mbagwa and I were in the trenches as young boys, training as accountants. So it is a pleasure to reconnect. Thank you, my president and chairman of council, for bringing me back together with my friend. But it's our honor to present to you on behalf of the president and the chairman of council this plaque. Thank you very much.
President is not getting it.
So yes, we're moving on to the official launch.
So,
So much. Please, that's living. Thank you so much. It's all free.
okay, are we set? Well, today it's a very big honor to launch the 2026 CIoD Corporate Governance Outlook. This is the first of what we hope will be an annual event, because we believe we should set the tone as far as corporate governance is concerned in Nigeria. A lot of people talk about economic outlook for the year. We want to focus and dominate that space of corporate governance. So, to the glory of God and the benefit of the corporate governance space in Nigeria, and to the glory of Nigeria and to all corporate governance professionals, it's my pleasure and honor to unveil our corporate governance outlook for 2026.
Please, John. Okay. Please, can we have and sorry, I know her as NECA. I'm so sorry, NECA. I'm not saying your full title and designation. Please, representing our partner EDC. And also and also Mrs. Okaya, who is representative of the Corporate Affairs Commission, also one of our stakeholders and our partners. Can we please have more copies of the magazine for the pictures, please? Thank you.
Okay. Let's go. Let's go.
All right, thank you very much. Please, we just have one last picture with the president, the panelists, the moderator, and the keynote speaker. Thank you so much. Just one picture on stage with that panel. Thank you so much. Please, we just need one picture with the panelists, the moderator, and the president, please. Okay, thank you very much. Oh, come on. Okay, thank you. Thank you very much. We have a quick goodwill message from the Corporate Affairs Commission, represented by Mrs. Adedoyin Okeya. She's the Assistant Director and Acting Head of the CAC Lagos office. Madam. Okay, she's representing the Registrar General, please. Thank you.
Okay, as she rightly introduced me, I'm Mrs. Adedoyin Okeya, an Assistant Director and Acting Head, Lagos Nodal Office of the Corporate Affairs Commission. I'm here to represent the Registrar General on the occasion of the launching of the Nigeria Corporate Governance Outlook 2026. Please, can we have one house? Goodwill message by the Registrar General or CEO, Corporate Affairs Commission, Hussaini Ishaq Magaji, SAN, on the occasion of the launch of the Corporate Governance Outlook by the Chartered Institute of Directors, CIoD, held on Tuesday, 31st March 2026 at the CIoD Secretariat, Ikoyi, Lagos. Distinguished Chairman, Presidents, and Council members of the Chartered Institute of Directors, Nigeria, esteemed members of the business community, regulators, development, partners, ladies and gentlemen. It is a great honor and privilege to deliver this goodwill message at the launch of the Corporate Governance Outlook by the Chartered Institute of Directors, Nigeria. Let me begin by commending the Institute for its consistent leadership and unwavering commitment to the promotion of sound corporate governance practices across both the public and private sectors in Nigeria. This initiative once again demonstrates the Institute's pivotal role in shaping responsible leadership and strengthening institutional frameworks. Corporate governance remains a fundamental pillar for sustainable economic growth, enhanced investor confidence, and institutional credibility. In an increasingly complex interconnected global economy, the imperatives of transparency, accountability, and ethical leadership have become even more critical. The Corporate Governance Outlook being unveiled today is therefore both timely and strategic, providing a forward-looking framework to guide governance practices in Nigeria. The Corporate Affairs Commission wishes to reaffirm its steadfast commitment to fostering a transparent, efficient, and reliable corporate registry that underpins good governance through the effective implementation of the CIoD corporate governance principles. The Commission has introduced transformative reforms aimed at strengthening corporate transparency and accountability. These include the institutionalization of beneficial ownership disclosure, the digitalization of company registration and post-incorporation processes, the deployment of artificial intelligence in our registration processes, as well as enhanced regulatory oversight mechanisms. Collectively, these measures align with global best practices and reinforce Nigeria's commitment to global best practices, combating illicit financial flows, improving investor confidence, and enhancing the ease of doing business. We recognize, however, that effective corporate governance is not the sole responsibility of regulators. It is a shared obligation that requires the active participation of directors, shareholders, professional bodies, and all relevant stakeholders. In this regard, the role of the Chartered Institute of Directors, Nigeria, is both strategic and indispensable. By equipping directors with the requisite knowledge, competencies, and orientation and ethical orientation, the Institute continues to make significant contributions to the development of resilient, transparent, and accountable institutions. The Corporate Governance Outlook will undoubtedly serve as a valuable resource for policymakers, corporate leaders, and investors. It offers critical insights into emerging risks, evolving governance trends, and the strategic responses required to navigate today's dynamic and rapidly changing business environment. As we move forward, I urge all stakeholders to embrace the principles articulated in this outlook and to work collaboratively towards entrenching a culture of integrity, compliance, and excellence in corporate governance across Nigeria. Once again, I congratulate the Chartered Institute of Directors Nigeria on this laudable initiative and wish you a successful launch. Thank you, and God bless the Republic of Nigeria. Hussaini Ishaq Magaji, SAN, Registrar General. Thank you for listening.
Thank you very much. Thank you very much, madam. I know that we've been here for a bit, but we're going to move swiftly along, and we're almost at the end of the program today. We have a brief message from our sponsors. Without them, we would not have been able to put this together. If, with everyone's permission, please, if you can just take 2 minutes to just watch a quick video from our sponsor, Russell Smith.
In the heart of Nigeria, a manufacturing revolution is transforming Africa's industrial future. Russell Smith, building industrial resilience for African industries, delivering world-class solutions across oil and gas, maritime, defense, and manufacturing. In over 20 years of operations, Russell Smith has transformed from an oil and gas specialist to an industrial technology leader serving critical sectors. For too long, Africa's critical industries have faced supply chain vulnerabilities and dependence on imported components, creating costly delays. We bring to you the Russell Smith Omnifactory, Nigeria's first multi-technology 3D manufacturing facility, turning months of waiting into days of production. We are manufacturing critical parts locally, maximizing uptime, reducing delays, enabling Africa's essential industries to build operational resilience. We are building local expertise, driving indigenous innovation, and creating industrial strength for generations to come. Russell Smith, engineering Africa's industrial future.
Thank you very much to our sponsors, Russell Smith, Energy, and IESL. We will now be drawing this event to a quick close. We have a quick call to action that will be delivered by Dr. Nosike Agokai, FCIOD. He will be joining us online. Is he ready?
Yes, I'm here.
Okay, thank you. Welcome, sir.
Thank you very much. So my job is to do a quick call to action. And that's exactly what I'll be doing now. My president, members of council, thank you for giving us the opportunity to say a few things. Those who have spoken as panelists, the moderator, keynote speaker, and those who have also delivered good work messages. Thank you very much. So the call to action is simply to make an appeal. What the CIoD has done is to move the standard of governance to a higher level. Governance, as we know, is simply defined as a system by which companies are directed and controlled. So they're trying to take the system of directing and control to a higher level. And this is why we appeal to all stakeholders. We appeal to boards of directors, we appeal to policymakers, we appeal to government agencies, and we appeal to regulators. The new normal, the board agenda is no longer what it used to be. It's no longer chairman's opening statement, adoption of minutes, matters arising, MD's report, closure of the meeting. It's now an agenda that recognizes that businesses will have to continue to exist but not simply to exist, but to achieve sustainable value. And this is why we need boards, as the CIoD has clearly spelled out in the outlook for 2026, that we need boards that can help to enhance strategic oversight, flexibility, transparency, boards that are well composed, boards that have a very good structure. And I oftentimes tell directors, owners of businesses, please do not appoint your relations and friends if they don't have what it takes to add value to your board and the company. Appoint those that you believe can add value. And when you make good profits, you can then give to your friends and your relations. Boards that understand digital transformation and cybersecurity. Boards that understand ESG and sustainability governance. Boards that internalize ethics, culture, and accountability. Bimbo talked about accountability framework. How many boards actually understand what we mean by accountability framework? This is very important. And this is one of the things that the CIoD has clearly spelled out in this outlook. Governing for sustainable value. Have a comprehensive agenda as an oversight. Have systems of risk management. How many boards actually have risk appetite statement? How many boards actually understand climate risk? How many boards actually understand that it is important that they go beyond shareholder primacy, that they begin to look at the stakeholders' approach to delivering value to the business and to the nation as a whole? We need boards that can work as an effective board to enhance financial performance, to achieve operational efficiency, to achieve sustainable growth, and adopt practices that have been clearly articulated in the outlook for 2026 by the CIoD, so that they can evolve and become future-ready boards. Rethink strategy and growth. No longer management is in charge of strategy. No, the board must take ownership of strategy. Build resilience into every decision that you make as a board. Drive a culture of accountability. Manage risk, and especially risks that deal with AI, risks that deal with sustainability, risks that deal with ESG. Manage all those. Look at AI as an imperative and ensure that the right things are done to ensure business continuity and sustainability. So embed sustainability in your strategy. Sustain the board-CEO relationship. This is also very important. We're talking about the board, but we must also talk about the fact that the board must recognize that the interface between the board and management is critical in delivering sustainable value. Prioritize talent and succession planning. This is also key in delivering long-term sustainability. Adopt rigorous forward-looking governance. Governance is key. The biggest risk that faces every single entity is the governance risk. And we must, as the CIoD has clearly spelled out in the outlook, make sure that we do the right things. Having an effective board, having a board that is properly composed. We know that, just like it was said during the panel discussion, that some costs are added because of the different regulations, particularly corporate governance regulation. But the benefits far outweigh this cost. So we acknowledge that costs will be there. But despite the compelling cost, despite those costs, the benefits are huge. And I think the CIoD has done a great job here. All we need as policymakers, as governance professionals, as directors, both in the public and the private sector, is to articulate and internalize all the things that have been included in this publication. This publication should actually be a Bible for every single organization, both in the private sector and in the public sector. So the mandate for every stakeholder is to cultivate and practice good governance, have a compliance framework that will enable us to comply with all laws and regulations, and then make sure that the right things are done at all times. Regenerate your board from time to time. Do not wait until members of your board get to 70, and then you begin to run around to say, oh, we should have engaged in very good constructive succession planning. Please do it now. Articulate all the issues, pick all the things, all the ideas, all the practices in this outlook, and I can assure you that you won't get it wrong. So we commend the CIoD for this landmark effort, and I urge every single stakeholder to take a copy and practice every single thing in this outlook. We commend the Institute for making this possible. We ask you to make it, I know the president has said so, but make it an enduring annual ritual. What we're doing today is not a training program. What we're doing today is a call to action for practice of good governance at the highest level. I thank you, Mr. President. I thank you, members of council, and I thank all those who have made this very successful. Thank you, and let us practice good governance. Thank you, ladies and gentlemen.
Thank you very much, Dr. Agokai, for that moving call to action, and hopefully it's landed in fertile ground. Just some quick announcements before we formally close. There's a feedback survey for those who are online. Once you exit, a QR code will appear on your screen. Please scan it and fill out the questions when the form comes up. For those of us who are in the room, the QR code is posted all along the room. So please scan after the event and kindly fill out the questionnaire. Thank you so much. And concerning all that we've been speaking about today, the Corporate Governance Outlook is available for sale. It's 30,000 Naira per copy. I think it's a very affordable price for the benefits that institutions can gain from the content. So kindly purchase for your firms, for your companies, and for your friends. Thank you so much. So to formally close the event, I would like to invite our Director General and Chief Executive Officer, Dr. Taiwo Nola Salausa, MCIoD.
Thank you. Mr. President, sir, permit me to skip all other protocols. Good afternoon, fellows and members of CIoD Nigeria. On behalf of the Governing Council, management, and staff of the Chartered Institute of Directors Nigeria, I'm deeply honored to deliver this vote of thanks at the conclusion of the launch of the CIoD 2026 Corporate Governance Outlook, a flagship initiative of the Institute designed to shape, guide, and elevate governance practices across Nigeria and beyond. We are particularly grateful to our esteemed keynote speaker, Mr. Jude Chemeka, MCIoD, for his insightful and forward-looking address. His perspectives on capital market development and governance continue to strengthen investor confidence and reinforce the importance of transparency, accountability, and market integrity. Our sincere appreciation also goes to our distinguished moderator, our mother in the house, because she's always there for us, Mrs. Bimbola Wright, FCIOD, whose wealth of experience and excellence in facilitating high-level dialogues ensured a rich, engaging, and impactful discussion. We also thank our distinguished panelists, Mr. Ike Mbagu, Dr. Adeyinka Azan, and Professor Franka Waje for their invaluable contributions. The Prof could not make it anyway. Deep insights and thoughtful, provoking perspectives on the evolving governance landscape in Nigeria and across Africa. We're equally grateful to the representatives of key regulatory and institutional partners for their unwavering support and continued collaboration in promoting sound corporate governance practices and regulatory excellence. Our profound appreciation goes to all our sponsors and partners whose generosity and support made this event possible. Your commitment to promoting governance excellence and responsible leadership is commendable and essential to the success of initiatives such as this. To our esteemed members, directors, and stakeholders who participated in this event virtually and physically, we thank you and sincerely for your presence, for your presence, engagement, and contributions. Your commitment to continuous learning, ethical leadership, and governance excellence is what sustains the relevance and impact of the Institute. We encourage you to carefully reflect on the insights shared today and apply them within your respective organizations to strengthen board effectiveness and enhance organizational performance. Distinguished ladies and gentlemen, as we draw the curtains of this event, we would like to inform you, just like the moderator has done, that a QR code will be displayed on your screens. We kindly ask that you take a few moments to complete the post-event survey. Your feedback is extremely valuable to us as an institute, as it enables us to continuously improve our programs, enhance stakeholder engagement, and deliver even greater value to our members and the broader governance community. Once again, I extend our heartfelt appreciation to everyone who contributed to the success of this event. Our keynote speaker, panelists, moderator, partners, sponsors, participants, and the entire CIoD sectorial team. May I kindly ask that we all remain committed to the ideals of good governance, integrity, and excellence in all our endeavors. Thank you for your attention. Thank you for your participation, and God bless you all. If you permit me, today is a very unique day for us. And he doesn't want us to blow, but sir, we've already gone beyond that. Yes, we have to do that. So on behalf of the secretariat, sir, we have a little gift for our president, who has done so much for the institute and so much for the corporate governance world. Mr. President, sir, please, sir, I want Alaji and Dr. Adeyinka Azan on behalf of the Governing Council to please come and help us present. And Mrs. Wright, please present this to our dear president. Yes.
I'm proud of you, because this is a demonstration of not only loyalty but appreciation by our staff. If you wouldn't mind, despite the time, I have to read what is on this card, because once we have given him the card, you will never see it again. The end of an era, the dawn of an even greater legacy. 45 years of steadfast service, a journey defined not by time, but by impact. At 11 PLC, you did more than rise through the ranks. You rose with purpose, shaping paths, setting standards, and embodying excellence at every turn. Yours has been a quiet mastery of discipline, a consistent devotion to duty, and a spirit that has inspired far beyond the walls of any boardroom. You live not just with years well spent, but with a legacy deeply etched in people, in institutions, and in the ideals of leadership you upheld. And so this is not an ending. It is a transition from remarkable service to even greater influence. We celebrate you, we honor you, we are inspired by you. Your story continues, stronger, higher, and enduring. Happy retirement, Mr. President. Otumba Adetunji Oyebanji, FCIOD. Today being 31st of March, 2026. And we can see him smiling as always, even in the picture. We are proud of you. Congratulations. It's the word that you want. No. This is a very good. Wallahi, I'm proud of you. No, I'm proud of you people. Honestly, you have really done well. It's a very good initiative. I would go a long way. Okay,